All right. Good morning, ladies and gentlemen. Welcome back to another ShareWise webinar. Today, we're very, very lucky to have the Executive Chairman, Charles Liu, and the Chief Operating Officer, Tim Gilbert, from Hastings Technology Metals, which is HAS on the ASX. So I appreciate both of you for your time. I know you're both busy men. So we'll let you guys get into a few things. But for those listening, it's going to be recorded. So if you do have to leave halfway through, feel free to reach out to us or jump on our YouTube channel. We'll be able to watch that. And I'm sure Tim or Charles will be more than happy to answer a few questions. But again, thanks for your time, gentlemen. And just the structure of it for those listening again, go through a bit of a presentation, drop in your questions throughout the presentation, and we'll have a Q&A at the end, so it'll be really engaging. It should be good. I'm looking forward to it, certainly. But Tim and Charles, I'll let you take the reins. I think Charles is going to share his screen, go through a little bit of a presentation, but go for it.
Thank you, Harry. Good morning, everyone, and thank you for coming to listen to our presentation, which will be focused on our two primary assets now, but in particular the Yanjibana joint venture that we have recently signed a joint venture agreement with Wyloo, and more recently we also announced this landmark acquisition of a gold area in the Kalgoorlie called Whiteheads Gold, and we'll talk more about that in a moment. So let me just bring up some slides. I'm just going to put up this share screen, and just bear with me.
Perfect, got that.
Okay.
Yeah.
All right, good. Okay, so this is the standard disclaimer and also forward-looking statements and competent person statement. And let me just get straight into the investment highlights. So I started off to say about the Yanjibana asset that we have up in the Gascoyne. You can see in the map on the right-hand side where it is, and it's about 1,100 kilometers northeast of Perth. And I have been involved in Yanjibana since the very discovery of this ore body back in 2014. Myself, working with a couple of geologists, discovered this high-grade neodymium praseodymium, otherwise NdPr being the chemical symbol, of an ore body that is well endowed, rich with this critical minerals that is needed for making magnets, what we call permanent magnets, that you will find in electric vehicles, to wind turbines, to robotics, and of course even your smartphone. And since 2014, I have taken the project step by step all the way to where it is now fully permitted. All the mine infrastructure has been built, the process flow sheet has been defined, and the asset sits on 17 years mine life, 30 million tons of resource and about 21 million tons of reserves. And with this joint venture signed with Wyloo, we basically have de-risked a lot of the execution risk of the project as we go into the final stage of FID and also construction then and into production. So I'll talk a little bit more about that as we progress on the slides. And the other key thing about this joint venture, which is, as I said, a 60-40, 60% Wyloo, 40% Hastings, is that we still have equal representation on the management in terms of a joint management committee as well as the marketing committee. And the pathway to FID and production is well defined. Once this transaction completes in 2 months' time, we have signed the agreement. We just need to go through various transfer of titles, particularly relating to about 30 over tenement ground, and also transfer of contracts, transfer of certain assets. These are all the long lead equipment items that need to be transferred into the joint venture company with Wyloo. Interestingly, we announced this acquisition of Whiteheads Gold, and located in Kalgoorlie. As you all know, Kalgoorlie is the mining capital of Australia, and in WA, Kalgoorlie is well served by manpower, infrastructure, and for us in the gold space, what you'll find as we progress in this presentation is that there are 4 gold processing plants near to the Whiteheads mine site. And what is interesting is that this particular tenement area is owned by Great Boulder. Great Boulder Resources is also listed on the ASX, and ticker symbol GBR. Great Boulder entered into an option with Great Western Gold, which is basically a group of private individuals, and we took over that option and basically provided clarity to Great Boulder and Great Western Gold, the timeline that we will want to bring this project into production. And you will hear very shortly, as my colleague Tim will talk more about the Whiteheads, is the fact that the project is very much simpler to execute than Yanjibana. We don't need to build infrastructure. We don't need to build a process plant. We don't need to build a tailings dam facility. And so it is really speed to execution, and cash flow is what we are aiming for. And as you can see in this bullet point here, we are looking at maiden reserves targeted for the first half of next year, and therefore being able to mine soon after that. So what you see in Hastings, therefore, is a multi-commodities company. We have rare earth. We also have niobium that is a byproduct of the rare earth at Yanjibana. And even within our other asset, you can see on the map on the right is Brockman. Brockman is an asset that has been sitting in Hastings for many years now. There is a scoping study done on the Brockman resource going back to 2015, 2016. And now that we've done the joint venture with Wyloo on Yanjibana, we're going to start to just blow the dust off Brockman and see what are the potential of monetizing this as well in terms of the niobium and the heavy rare earths. And heavy rare earths here, we are really talking about dysprosium, which also is used in permanent magnets. It's just that dysprosium is used very sparingly in a permanent magnet compared to neodymium and praseodymium, i.e. NdPr. So also sitting at Brockman is the Darcy Gold exploration area that we own. And there's also Arc Gold, which is also an exploration area that we own right next door to Yanjibana, as you can see from this map on the right. So let me just talk about the joint venture with Wyloo. And it's a 60-40 joint venture. It's what we call an unincorporated joint venture. And the reasons is mainly motivated by tax, in the sense that the accumulated tax losses over the years doesn't get lost if we were to transfer it into a self-contained new company. The 60-40 structure is such that we will have 40% share of revenue and project cash flow. And of course, we are also committed to 40% of the cost going forward. And Wyloo is acting as the JV manager and operator, and two representatives, myself and a colleague that you'll find, his name is Vince Catania. He's, if you look at the photo on the left-hand side, he's standing to my left. And Vince, which is, he's actually in fact on the right, far right of the photo as you look at it. And he and I will sit on that management committee. The project is de-risked in a significant way, simply because there is an outstanding $120 million of exchangeable note due to Wyloo, and with this transaction, it actually cancels out that exchangeable note that was taken on back in 2022, October 2022, when we were considering or rather we took a 21% interest in Neo Performance Materials, and then we were then considering trying to merge the two companies together. The other thing I should call out on this joint venture is that for most of you, you probably know that Wyloo is the private investment minerals company of Mr. Andrew Forrest. Mr. Andrew Forrest obviously built a very successful company in Fortescue, and his whole group brings significant technical as well as financial strength to the project. And with the partnership with Wyloo, we are looking forward to progressing Yanjibana into construction and production. So here's the organizational structure. You can see that myself and Vince, as I mentioned, and from Wyloo, Joel Turco and Luca Giocovazzi. If I may just go back very quickly, Luca Giocovazzi is standing there on my right-hand side. So for looking at the photo, he'll be the second individual from the left. And so with Joel, he is also standing there on the far left of the picture as you looked at it. And basically, we will have equal representation. What Hastings bring to the joint venture, as you appreciate very importantly, is that having discovered Yanjibana in 2014, a lot of the money has been invested into the process flow and into defining the resource and the reserves and into permitting, and also not just the construction and the process flow of a beneficiation mine at Yanjibana, but it's also the downstream hydromet plant that we are looking in with Wyloo to decide where is the best location for this hydromet plant. And at the moment, we are permitted to construct it in Onslow, but with the cost pressures of the mining space in Australia, the opportunity has come about for us to consider downstream in Saudi Arabia or even in Estonia, where Neo Performance Materials has a processing, oxide processing plant, as well as a magnet manufacturing plant. So a lot of discussions will go into where would be the best and ideal location to position the hydromet plant, and we will work closely with Wyloo to determine that. So what Hastings bring to the joint venture, therefore, is obviously our experience and knowledge over the last 10, 11 years in the rare earth space, all the way from the quality of the ore body and even into the downstream into the markets. We have offtake contracts with ThyssenKrupp for 2/3 of our material, whereby ThyssenKrupp, which is a German industrial company, they have a raw materials trading arm. We signed an offtake with them, which is like a framework agreement. And what happens is that when we come closer into production with a timeline of delivery of our concentrate, we will then enter into a final take or pay with the customer of ThyssenKrupp. And what ThyssenKrupp provides for is obviously credit standing, counterparty risk, and most importantly, bankability from a project finance perspective as we get into final discussions with the lenders before we call on FID. So the other thing that we bring to the joint venture is our geological knowledge of Yanjibana and the whole logistics and supply. Now, what you will see later on in the slides is that we have procured all the equipment, and these are long lead equipment as well as equipment that is small items that is needed to construct the concentrate plant, or what is called also a beneficiation plant at Yanjibana. And on top of that, also equipment for the hydromet plant, because some pieces of equipment for the hydromet plant has a 2.5 years lead time from the point of ordering for it. And if you factor in the engineering design work prior to placing the order, the lead time could be as long as 3 to 3.5 years. So the engineering input, the knowledge of the industry adds a lot to the joint venture that we are into with Wyloo. So here you see a timeline. This is an indicative timeline. And I guess the important thing to call out is that, as I said at the start, having signed the agreement, we will now go through the conditions precedents to closing. And also there will be a shareholders EGM in the course of the next 5-6 weeks. And once we can close on this transaction, the immediate task is really to review the CapEx and OpEx for the project. The last CapEx was done about 15-18 months ago, and we need to refresh that. And you'll see later on in one of our slides that the remaining capital cost, now that we've built the infrastructure at Yanjibana, the remaining capital cost is in about $316 million, including contingencies, but if you exclude contingencies, about $290 million. And so once we have done that CapEx review, we expect that in the course of the next 12 months from now, we would be have the project ready to fund and calling FID. And as you can see from the quote from Luca Giacovazzi, the CEO of Wyloo, his intention is really to try and take this to FID as soon as possible. And the construction time of the beneficiation plant is 18 months, and therefore we'll be looking at the fourth quarter of 2027 for first production out of Yanjibana. So the important point is I want to mention about the Yanjibana ore body since the discovery in 2014. We've done a lot of test work, both in terms of two pilot plant test work on the concentrate and one pilot plant test work on the carbonate, which is after the hydrometallurgy process. And you can see from this slide that compared to a lot of the other rare earth companies that, for example, Lynas, of course, we all know is in production, and so is MP Materials, and Peak Rare Earths is coming to production. Bayan Obo in China is, of course, one of the largest rare earth mine in the world. But if you look at our high-grade neodymium praseodymium NdPr to TREO ratio, we sit right at the top compared to all our peers. And this, in essence, drives the very strong economics of Yanjibana. And if you look at the margin curve on the right-hand side, according to CRU, a London-based commodities research company, what they have told us is that we sit high up on the operational margin curve in terms of the strength of that ore body, that basically when you compare to all the others in the group, we are in the top quartile of that margin curve. So as a quick snapshot, I talked about the fact that we have 17 years mine life and a world-class ore body. $158 million has been spent on non-process infrastructure. That means the infrastructure on the mine site. And this effectively has de-risked 1/3 of the project, and being fully permitted with both state and Commonwealth approvals in place, native title agreement in place, and an offtake with ThyssenKrupp, as I already mentioned. We are well positioned to undertake this construction and into production. The remaining capital cost is $289 million, as you can see on the right-hand side. And with that high-grade NdPr ore body, our post-tax NPV is about $865 million ungeared, and the IRR is 31% with 3.4 years payback, and the EBITDA for the project on a per annum paid basis is about $250 million, and the life of mine free cash flow is $3.3 billion. As I said earlier, we sit on the first quartile of the global margin curve. Here's a snapshot of all the, what you see is what has already been built. A picture speaks 1,000 words, and with the exception of the aeroplane, everything else you see on this photo, we own and we have paid for, and there's no debt secured on this equipment. So we are all ready, as they say, shovel ready to get the plant construction underway once Wyloo and ourselves have made certain critical decisions on going into FID. Here's another slide that just shows you the long lead items. I mentioned about the rotary kiln needed for the hydromet plant, which is what we call also the stage 2. And the hydromet plant produces a carbonate before it goes into oxide separation. And what you can see is that the rotary kiln sitting outside of Perth, and pumps and equipment and off-gas scrubber, another big equipment, and again another long lead item that takes about 2.5 years to fabricate, and also a number of the pumps that are sitting in the warehouses. So just very briefly on supply and demand, and here we have CRU, Boston Consulting, and Coherent Market. We went to different analysts to get an idea as to what is the growth for permanent magnets. And what you can see is the projections from 2023 to 2030. the compound annual growth rate that is being talked about is about 8%. For the growth in the different segments, electric vehicles, wind turbines, the combustion engine vehicles as well, because in your standard combustion engine cars, you still have a lot of magnets for things like your car seats and your window lifters, wiper motors and power steering. All that requires a permanent magnet. And of course, in the electronic space and others. And in the other, what we have seen is that there is an emerging area whereby robotics and humanoid robotics is now being talked about and being the research, a very advanced research has gone into it. And we expect to see robotics being a new growth area for permanent magnets. And on the right-hand side, what you have is that CRU is advising us that if you look all the way out to 2040, their view is that there is a shortage of supply because it takes a long time to bring a rare earth mine into production. And so their view is that by 2030, with the expected growth in use of permanent magnets, they see 8 more Yanjibana that is needed to come and fill that demand-supply gap. So now I'd like to hand over to my colleague, Tim. Tim has many years experience in the gold mining space, and I'll let him introduce himself and talk to you briefly about our Whiteheads Gold Project. Over to you, Tim.
Thank you, Charles. Good morning, everybody. As Charles said, Tim Gilbert, been with Hastings 2.5 years or so, and it's exciting to be talking about Kalgoorlie. I spent a lot of time in Kalgoorlie previously roles, so let me update you on a very, very exciting project that we have going on in the goldfields. You will see in front of us right now that we have a modest transaction consideration to buy the Whiteheads project, and that is being bought from Great Western Gold. Now, the upfront cash for that is $370,000 and 3 million Hastings shares, consideration shares that go with it. In addition to that, there are another payable process later on as we get into resource, JORC resource, and that totals $800,000 later on, and that's dependent on 3 different tranches, getting to 125,000 ounces of resource, 250, and then 1 million ounces of resource. And the prospectivity for us up there is very, very good. And I'll talk a little bit about that in a short space of time. The acquisition itself is we are well into our due diligence at the moment, and it is looking very, very good in terms of the options that we are seeing in front of us to monetize the project quickly, as Charles alluded to earlier on. Now, some of the excitement that we're seeing in there is I just bring your attention to some of the grades that have been mined. So this is a historic mining area. You'll see the photograph on the right-hand side. It's the old stamp at Whiteheads. Back in 1895 is our earliest records we can find, and it was mined right through to the 1950s. And in some places we are seeing reported grades of 49 grams per ton coming out of Whiteheads. You know, in today's money, 1.5 ounces. And if you're mining 1.5 ounces, then you are in good gold areas to be mining. Some of the other areas that we found historically reported grades, Lady Betty's, one of the underground old mines that is there, 41 grams per ton, and Whiteheads Find, 35 grams per ton. So you'll see that there is a lot of opportunity for high grade historical mines in and around this area. Not that we're expecting to be finding grades quite as high as that, but we are expecting to see some very positive results coming back from some drilling we'll be doing very, very soon. The highlights. Close to Kalgoorlie, it's the right postcode. You know, we're talking Kalgoorlie, 50 minutes in the air from Perth. It is the centre of the goldfields mining industry. There are no need for us to have an airport anywhere near us. There's no need for an accommodation village. All of that will be served us out of Kalgoorlie. Just in terms of getting on the ground, we have a great relationship with the Kakara Aboriginal Corporation. They have recently been nominated as the native title for the area we're in, and we have a long history with those guys. Charles alluded to why we see this as a real opportunity to monetize gold into Hastings. So as I mentioned beforehand, we're very, very close to Kalgoorlie. this is open pit mining. We're not going to be having to push a decline down and get into ventilation for undergrounds or anything like that. And we certainly expect that we will be able to process the ore at one of 4 process plants, which are situated within 80 kilometres of us. I'll show you that momentarily on a map. Upside geological space, we're on 380 square kilometres of highly prospective tenure. And I just would mention from that point of view where Great Western Gold and the previous owners prior to that, Great Boulder Resources, have been amalgamating some tenements in the area, and part of the deal that makes it very good for us is the fact that those tenements have now been brought together under one set of tenure. Thanks, Charles. It just gives you a little bit of a map of where we are. So you'll see Whiteheads Gold Project, which is center top right, and then around that area you'll see as you come down towards Kalgoorlie, we've noted the 4 process plants that are close by. Black Swan, that is a plant that has been currently looked at to convert it from a nickel operation to gold, and then you get down to Kanana Bell, Lakewood and Paddington on the way into Kalgoorlie. We haven't assumed that we're going to go into the super pit here. I think the owners of the super pit are going to be pushing as much ore through that plant as they possibly can, so we're just taking a small view on us. The 4 mills, as I said, they have 9.2 million tonnes per annum of processing capacity through them. And when we are talking about what is our optionality that we're looking at, to put it into perspective, we're looking at a modest 5,000 ounces that we want to bring into reserve in the not too distant future. Now, 5,000 ounces in an open pit, it is not a huge amount of ore. We think it's going to be something in the order of 120,000, 140,000 tonnes of ore. But at 5,000 ounces, at $5,000 an ounce, you can see there's potential revenue there, which is going to be in excess of $20 million if and when we prove that up, and I expect we will be. And because I say it's only 150,000 tonnes of ore, that is why we think that we will be able to find one of those 4 process plants will be able to take that ore and co-feed it with their own production and allow us to monetize the mining. In the future past that, as I mentioned beforehand, 380 kilometres of tenement packages and in historic gold mining areas. So the opportunity there that with that 10,000 metres of historical drilling, the geochemistry that's been done and the gravity surveys, we believe that we are going to be able to bring a little bit more knowledge, a little bit more focus into this area and get these near-term opportunities that we see up and going. And those near-term opportunities are some areas called Blue Poles, 7 Leaders and Lady Betty. Of those, 7 Leaders is the area that we believe we will get into production very, very quickly, as Charles mentioned beforehand. That's going to be next year. And then soon after that, we expect that the Lady Betty, which is one of those very, very high-grade previous underground mines, that we'll be able to put a pit over the top of that, and we'll be able to get into some very, very good grades to come out of that area as well. And then the biggest resource that we're seeing on the moment is Blue Poles. We think that's got something in the order of a little bit over 1 million tonnes in that area, and 1 million tonnes at around about 1.2 grams per tonne. You can certainly work out that the options that we've got here are looking at a very good opportunity to mine some gold. I've got a picture of around about 50,000 ounces, which is in those 3 areas. Again, that is my view, and from what I've seen of the geology so far, I think we'll be in a position that we'll be able to give further updates to the market as we go through and actually define those resources as we go through from that point of view. Thanks, Charles. Now, the other exciting options that we've got within Hastings' portfolio is, Charles mentioned it beforehand, Brockman Niobium and Heavy Rare Earths project. So you'll see from the map on the right-hand side, that's based up near Halls Creek in the north of WA. It's got some very well-known partners in and around that area. So Brands Range is just a couple of 100 k's down the road from that, and WA1 is 490 k's south of Halls Creek. So there's some good neighbours. The Brockman Niobium project. It's been with Hastings for a long time, as Charles mentioned. It's a very substantial resource in there, 41.6 million tonnes of resource sitting there. And what we want to be doing is going back into the pre-feasibility study status and updating that for current knowledge that we have, and updated it for process plant that we're going to need, and see how we can monetize that area as well. And then very quickly, just to touch your base, sorry, just thank you, Charles. You lead on to Darcy's Gold. So this is another exciting area that we have up and around the Halls Creek area. So we have these tenements which are overlain by Brockman, as you can see in that left-hand side there. It is another one of those areas that is historically well endowed in gold. It was first mined back in 1885. It was the original, one of the original gold rushes in WA, before everybody moved from Halls Creek down towards Kalgoorlie in the early 1890s. And from those days, again, very, very high grade mining has occurred. You'll see the second dot point in there in Darcy's, 79.3 tonnes of ore at an average grade of 24 grams per tonne. So again, we're very, very excited about this portfolio of gold that we're actually starting to build up within Hastings. And then on the right-hand side, bring your attention to Arc Gold, which is some tenements we have 100% holding of, which are just to the southeast of Yanjibana. So again, very close to where we are, with other historical gold mines in that area as well. So the picture that we're starting to build here for Hastings is we've got our primary flagship at Yanjibana, and then as a 40% owner of that, we're now branching ourselves into some gold mining areas where we believe we can monetize those leases quickly and efficiently and get some cash flow into a diversified mining house, Hastings. Thanks, Charles. I think we can just zip right on past that one. And this is just to bring the opportunity of the Darcy's Gold up near Brockman. You'll see where Halls Creek is there. You'll see some of the historical mining that's been going on in and around that area over previous times. Butcher's Creek is a call-out one that has been a prolific gold miner there, and Nicholson's. They're the two major mines that have been in and around that area. And again, it's good geological background for us, and it's got another good postcode. So we're very excited to be able to get into Darcy's once we've got Whiteheads settled down, and we move through that Whiteheads into reserve. So to summarise that for us, I'll hand over to Charles momentarily, but the gold mining opportunity that sits in front of Hastings, I think, is very, very exciting, and in a place that we know very, very well. Thank you, Charles.
Thank you, Tim. This is just a quick slide on the board of directors and senior management in the company. As I mentioned, Vince Catania, who's GM Corporate, will join me in the management committee of the joint venture. And looking at the board of directors, John Cross-Steinmetz was formerly the Chief Operating Officer for Linus, going back to 2013 to 2015. He's been on the board of Hastings since 2016. And Guy Robertson has been with Hastings since 2012 when he joined the board, and has many, many years of CFO experience, as well as having served in large multinationals in Hong Kong and Australia. And myself, my background is investment banking, and I left investment banking in the early 2000s and ventured into the mining space after the subprime crisis of 2008, 2009, and took over Hastings in December of 2013, and basically from 2014 onwards, working with the geologists, as I said earlier, discovered this amazing Yanjibana ore body. We've been very blessed and gifted with this ore body. The good Lord has blessed us over the years, and we've taken it step by step, going through all the many different challenges and obstacles to bring it to where we are today as being shovel ready. And Neil Hackett, who has been on the board, is a very experienced company secretary, as well as he is also a facilitator for the AICD courses. And Mel Randall has 45 years experience in the mining and resource space. So in summary, what I will just want to call out then is that there is a very strong demand, as you saw in the supply-demand slide, and that's projected growth in the in humanoid robotics as being a big area that will be opening up in the near future. Just shows that demand for NdPr remains very strong. That number, CAGR number of about 8-9% over the next 5 years to the end of this decade underscores that demand opportunity for, and therefore drives the opportunity for a company like Hastings and in this joint venture with Wyloo to bring the project into production. As I said, the project is de-risked, 1/3 de-risked, and with Whiteheads Gold coming on as our other project, we are very confident with the nature of the ore body, the advantages of being in Kalgoorlie, and what we have seen in the geological data of Whiteheads, that we can bring this into cash flow without spending a lot of money. And Brockman, as Tim has mentioned, is something that we will take a closer look at and see what is the opportunity there for us, given that it has a very strong presence of niobium as well as dysprosium, hafnium, and zircon. So on that basis, I end my presentation today, and I hand it back to Harry.
Charles and Tim, excellent. Thank you very much. There's a lot happening, that's for sure. And there's a lot of exciting times potentially for Hastings and shareholders involved. You know, you've got a very strong team behind you. Just the sort of, you know, the slide you just had up there with everyone on the board and you know, the whole team behind you. There's a lot of experience there. Does that give both of you, or Charles in this instance more so, I'll ask you this question, does it give you a lot more confidence that Hastings can get to where it wants to with the right team? And you know, there's still a number of people you're trying to get on board to boost the projects to where they need to get to. How is the team looking?
Yes, so I think over the years, I've always focused on ensuring that we build the right management and bring in the right skill sets into the company as we progress the project stage by stage. And as you can see, in 2016, the first person or the first rare earth experienced person I brought onto the company as a director is John Claw. As it turned out, he left Lynas in 2015. He had a lot of experience having been at Lynas, and he was able to guide me when we started on defining the process flow for Yanjibana. And having brought on different skill sets onto the board, over the years, we have also reinforced the management, and a lot of that management strength and the knowledge that we have in the company just basically has positioned us in this whole rare earth space where, as you know, there's not a great deal of people you can go out there and call on unless you build that knowledge in-house, because the nature of the rare earth ore body is that each and every ore body is different. It's not like gold. And therefore, you have to develop your own bespoke process flow. And the quality of your ore body ultimately defines the economics, as we all understand. And the geology of Yanjibana, as I said, we've just been blessed with a very good geology there that does not have high levels of radioactive materials. We have very, very small, very minute levels of uranium and thorium. And so those advantages helps us to bring this project into realization. And hence, over the last 10 years, with the joint venture now signed with Wyloo, that combination basically enables us to undertake the project with a much, much higher level of confidence in de-risking and building value for shareholders.
Yeah, beautiful. And I think the management team and just the team in general, if everyone's got the same mindset, it increases the chances of getting the company to where you want to get it to. You know, you being based in Singapore a lot of the time, how do you manage to keep everyone on track and keep everyone on the same page?
Well, I spend a lot of my time on Teams. I spend every month, I'm down in Perth for a week, 10 days, sometimes 2 weeks. to travel occasionally out east to meet with investors. And the advantage of being in Singapore is that we also have a lot of shareholders coming out of Singapore and Malaysia and Hong Kong and even London. And in the early years, I spent a lot of time talking to the end users in Europe, the European tier one automotive components manufacturer like Schaeffler and Brose and Bosch, and also the OEMs like BMW, Mercedes, and VW. So there was a lot of travel needed, and I traveled to China and traveled to Japan, so as to get a very full understanding of this complex business of rare earths and magnets. And hence, we had always the intention of integrating end to end from mine to magnets, because there's a lot of value in the entire supply chain, because from the mine to the magnet, there are 7 stages that one has to go through to get that end product of a magnet, and that magnet is bespoke. And so that really led us to, in 2022, to work with Wyloo, because they had the same vision, and that's where they lent us the money and under an exchangeable note structure, whereby we bought a 21% strategic shareholding in Neo Performance Materials. Now, with this joint venture, what we have agreed on is that it would make more sense for Wyloo to partner us and be invested at Yanjibana at the project or asset level, and for us to transfer the Neo Performance shares, which is listed on the Toronto Stock Exchange, transfer that to Wyloo, so that Wyloo, as they have interest in Canada already through their Noront nickel investment, it made it a more strategic move to just move a few pieces on the chessboard, so that we position Yanjibana and Hastings ready for ready for the concentrate production in WA.
Beautiful. And just on the note there of production, I've had a few questions just come through as you were speaking. You know, you've got all the equipment. It seems like everything's very, very close to being there. Obviously, you're still doing due diligence, but when do you expect that production to start? What's the guidance there moving forward for the rest of this year?
Yeah, so there are 2 sets of equipment, one for the concentrate plant, otherwise called the beneficiation plant, and then the others is for the hydromet plant. As far as the concentrate plant is concerned, we are looking to, over the next 12 months, to come to FID and therefore start construction. And as I said earlier in one of our slides, we are looking at a late 2027 production.
Yep.
In terms of the hydromet plant, the hydromet produces the carbonate, and the carbonate is still an intermediate product. It has to be brought into a oxide separation plant in order to get the rare earth oxides like neodymium oxides or praseodymium oxides. So what we have to do is that where will it be best situated? What is the economics? What's the cost? And also the strategy of it, simply because rare earth, as we all understand, is somewhat played into the geopolitical space. And being a geopolitical football, Wyloo and ourselves are very careful and very strategic in how best to position this hydromet plant and set ourselves up for a stronger downstream ability to deliver the carbonate into a oxide separation plant. And Neo Performance does have an oxide separation plant in Estonia, and they also have just started to commission their permanent magnet manufacturing plant in Estonia. So we have to weigh a number of options. As I said, we are fully permitted to build the plant in Onslow. We have signed an MOU with the Saudi government in November last year. The Saudi Arabian government is very interested to build a renewable energy industry, whereby rare earth and downstream rare earth production into magnets is one of those. parts of that strategy that they have. And so they signed that MOU with us with a very keen interest that we bring the concentrate from Yanjibana to Saudi Arabia, whereby they will help fund the hydromet plant and the oxide, and then into a magnet facility as well. So there is quite a lot of discussions that will and need to take place, as well as has taken place. And so we need to put all these things together as we once we complete on the joint venture.
Yeah, there's a lot of pieces to the puzzle. A lot of being done, but there's still a lot to go. And with so many things in the pipeline, so many things to do, what are the key challenges that you see, Charles, that could potentially delay or potentially really impact the progress you guys are making, and what would mean this doesn't go in your favor? What are those challenges that you've looked at, and how are you going to combat that?
Well, that's a good question, Harry. The reason why we saw an opportunity to go into Whiteheads to complement what we have in ARC and Darcy is that originally our plan is that once we've got the joint venture done, we will then start to do exploration drilling to define the resource at ARC, which is right next door to Yanjibana, or at Darcy, which is sitting within the entire Brockman area. However, for exactly the reasons that in your question, we saw an opportunity that we should look to diversify our revenue base and try and accelerate that diversification. And by accelerating, we looked for some time over the last 6 months at opportunities that we can immediately monetize and bring cash flow into the company. And that would be projects within a 18 months to 2 years time frame that we could monetize. And as it turned out, again, we were very fortunate, we were very blessed, and Whiteheads came along, and the Great Western Group vendors saw that as an opportunity to work with Hastings to accelerate the development at Whiteheads and bring cash flow into the door. So it turned out to be very complementary, and the timing looks right. And the challenges of the rare earth space, as you understand, is complicated by politics, but these complications can be very positive for the commodity itself. And for us, we have been staying on track over the last 10 years to try and bring the product into production, right? Bring the project into production, and that remains unchanged.
Yeah, beautiful. And I mean, by the sounds of it, just on what you've just said, the key to make sure the challenges that do come to make sure it doesn't override the positives, you're just gonna you're gonna de-risk, and you're gonna make sure that there's safety nets in place.
Yes.
Beautiful. And Tim, just over to you really quickly, obviously as the Chief Operations Officer, how do you, over the next 2 years before you get to that production stage, how do you plan to provide shareholder value? Hope the whole idea is for shareholders out there and shareholders listening to see that share price go in the right direction. How do you look to keep those loyal shareholders involved and maintain a little bit of confidence out there, given the role that you're playing?
Thanks, Harry. Look, the key focus area there, I think, is to maintain that focus. Firstly, at the Yanjibana, we've got to be showing that we're moving forward with any refresh studies that we're doing there. And as Charles mentioned beforehand, we do have a lot of technical people who remain with Hastings who will be in and about that area. So on the rare earth side of things, we're very, very focused on providing that support into Wyloo, and we'll continue to do that, and we'll continue to provide some of the opportunities that we've already seen there to benefit that project. When we talk about getting up to Brockman, again, we do have that long history of rare earth processing in this business, and we are retaining that. We're not releasing all of that knowledge into Perth. We are keeping it, and it's a part of our critical aspect which we have foreseen on this and we have planned for, is we must maintain capability in rare earths in the business, and we have done that. Then the second side out of it is where we get into and fast track our gold. And Charles mentioned beforehand about why Whiteheads fits us right now. And it fits us right now because it's small, it's compact, it's in Kalgoorlie, and knowing the gold mining business in WA, there are very many different consultants who are available to come in and help us. You know,
Yeah.
where we're working with one company at the moment on some geological information for Whiteheads. It's one of those opportunities. I'm sure you know, Harry, when you've been in Perth for many, many years, you've got a lot of relationships, and that's when it comes to fore. And picking up the phone and getting consultants in, picking up the phone, getting drill rigs in, picking up the phone, getting people to come in and help you on short-term contracts is the way many, many juniors work in the gold space in WA, and that's how we're going to be doing it. We're certainly not going to beat ourselves up. We're not going to get fat. We're going to be very much a case of be very, very focused, use consultants, and get in and do that work. And just to mention, you know, that early stage gold production that we're looking at right now, again, it's 5,000 ounces that we're looking at. And as I said before, 125, 140,000 tons. That's a very, very small mine. That's a 4-month dig ratio
Yeah.
in Kalgoorlie. You know, we're going to dig it out of the ground very quickly. It's going to be contractor mining. It's going to be small kit, available kit. You know, we're not talking about an 800-ton excavator on this. We're talking about a 50-tonner. So, you know, we've got very, very clear plans and understand what we're trying to do in the short term. And that's
Yep.
dig a hole in the ground, get some ounces out, monetize it, and that leads us into some cash flow where we go further exploration and build that gold resource and then build that opportunity in reserve, and we grow. And it's going to be growth through finding more gold on the tenements we have at those 3 different projects.
Yeah, excellent. I think that's a perfect response there, Tim. I mean, that's what shareholders are going to want to see, and you know, hopefully the share price will follow the good news that's going to potentially come out and unfold. Just on the topic of just the gold space in general, obviously we've just seen the share price, the price of gold, you know, completely go through the roof over recent months. Do you see the trend there? You know, in your opinion, and obviously, you know, there's no guarantee, it's just an opinion based, but where do you see the price of gold going, you know, over the next 12 months?
I'm probably not going to jump up and say where it's going to go, Harry, but when we track the gold price over all the years that we've been in, there are some short-term corrections, but there's never been that huge major fall off a cliff episode, which has been going on. So when I've been doing the numbers with, we got our chief geologist sitting next to me, when we've been doing the numbers on it, we've been doing numbers on a significantly lower gold price because I don't want to put Hastings in a situation that says I've got to be at $5,000 an ounce Aussie to make
Yeah,
money out of this thing. You know,
yeah,
we're running the numbers, getting down to $3,500 an ounce, and if we're going to make money at that point, then
yeah.
that gives me the confidence to say to Charles and the shareholders, we are going to be able to monetize what's in the ground, and we're not going to lose money on it. So that's our backstop.
Anything over that's just a benefit, right?
Well, that's right. That's right. I mean, you've been around mining a long, long time to say if you pitch your operations budget on a $5,000 an ounce gold price, you're going to come unstuck. So
Yeah.
you've always got to come underneath it, and you take the cream off the top.
Yeah, exactly. I think that's a great idea. I guess that goes back to that last question. One of the questions I asked Charles: how do you look to de-risk and, you know, combat any challenges that do, you know, come moving forward? Because they will certainly arise, and you've got to sort of navigate that. You know, just quickly, you know, one of the last questions I will ask, and it's a question I like to ask, you know, everyone I sort of interview and have these webinars with. You know, if there was one reason, and Tim or Charles, you can answer. If there was one reason why someone should become a new shareholder into Hastings, or existing shareholders should continue to be a shareholder, you know, what is that excitement and what is the factor that, you know, drives you both, and why should they continue or become a shareholder of Hastings, do you think?
Tim, you want to go first?
I can go first on that. I think fundamentally, Charles mentioned, you know, when we talk about rare earths, and you look at how electric vehicles, how wind turbines, how robots are going to continue to grow into our everyday lives. That's not going to go away. You know, the whole world is, you're looking at the political situation in Australia, and we've got, you know, politicians saying we need to get more renewables. That's where you're going to need magnets to drive a lot of that sort of stuff. So I just don't see the demand going away from magnets anytime soon. And as soon as you have that demand that keeps on going, and you look at an ore body like Yanjibana, and you look at the life of that ore body, it's a 17-year life of mine at the moment, but it's only 1/3 of the strike length of the ore body that's really been drilled. So it's a multi-generational project at Yanjibana, and we are a 40% owner of that project. And as you saw on the cost curve earlier on, we are on the right side of that cost curve. It's a high-grade deposit, it's open pit, and it's relatively simple to process it into a concentrate. Gets a little bit more difficult downstream. I understand that, and I'm sure the listeners do as well. But it's a really, really good project. So that's how we get some swings and roundabouts as we progress that through. And through the deal with Wyloo, it's been de-risked from a Hastings shareholder's point of view. It has been significantly de-risked. And then in that space, when we looked at what Hastings is going to do, we don't want to be a one commodity junior. We've got to branch into other areas. And that is why we've been working very, very hard in the background. Charles alluded to, 6-7 months, looking at where we can find that right entry into the gold space. And we've looked at many, many different opportunities, and some of them may be there in the future, but we've got to get some runs on the board. And Whiteheads is going to be that opportunity for us to go out there and do that. We can generate some cash flow very, very quickly at Whiteheads. You look at the gold mining history that's there. It's in the right trend. I don't want to go into a geological structural report onto it, but we're bounded by east and west faults. And if you know anything about Kalgoorlie, gold's in the fault zones. So that's where we're focused. And that's not through accident that we've done that. We've done that specifically for that site at that price entry. So I think we've got a great opportunity both in rare earths and gold into the future.
Thanks, Tim. And Charles, over to you. One reason, your one reason, what would it be?
Yeah, well, Tim has answered the question very comprehensively, and those would also be my core points to emphasize on. If there's one more or two more things I can say is, number one, I'm heavily invested in the project. Myself and the family office holds about 14-15% shareholding in the company after all these 11 years, and you'll find in the ASX record that I have been constantly buying more shares through placements as we fund the project. And on top of that, you'll find in the ASX disclosure, I haven't sold one share. So I have just been constantly investing into Yanjibana, and I will continue to invest into Whiteheads as well. And I'm very excited about Whiteheads simply because it diversifies our risk. It brings cash flow into the door much sooner than we expect. And rare earth is a very exciting commodity. It's never going to go out of fashion so long as supermagnets is needed, and there's no substitute for neodymium and praseodymium to make a supermagnet, right? A permanent magnet. And of course, gold stand the test of time. And gold has been around since year dot. And as a Christian, I'll tell you, gold is mentioned in the Bible from Genesis to Revelation. The first chapter, the last chapter of the Bible, and I believe that it will not stop at $3,300 an ounce. It will probably go higher.
Yeah, well, gentlemen, I really, really appreciate your time, and I think that's been an excellent little brief. More than a little brief. It's been a great discussion, and hopefully a lot of people listening, they've got the value they are looking for. As I mentioned, it is recorded, so if you've missed a few things, feel free to get on our website, look at the recording on our YouTube channel, and Charles and Tim, their contact details. I'm sure you'll be able to reach those gentlemen and ask them some questions. But I'm one of the senior advisors and head of desk here at Sharewise. I do appreciate your time, gentlemen. And next time, hopefully we can do another webinar.
Thank you, Harry. And thank you to all the listeners.
Thank you. And enjoy the rest of the afternoon, gentlemen.
Okay. Bye-bye.
Thank you. Bye-bye.
Bye.